Today on Retiring Well with Centennial Wealth Advisory, we are talking about qualified retirement plans such as IRAs, 401ks, 403bs, and 457s.
These are accounts where you are allowed to deposit money for your retirement. In essence, you're making a deal with the IRS.
Coming up, we'll discuss in detail the benefits and the disadvantages of those qualified retirement plans.
All these qualified retirement plans, are they good for your retirement planning? Or are they the worst account you could possibly own? This is a question. It's important you understand this.
All of this and more on Retiring Well with Centennial Wealth Advisory, starting right now.
Retiring Well with Centennial Wealth Advisory, helping you make smart decisions with your money so you can live a better life. Today is the day you can take back control of your money. Retiring Well with Centennial Wealth Advisory, where we believe your best is yet to come.
Welcome to Retiring Well. I am your host, Michael Reese. I'm excited about this week's show. We are talking about 401ks, 403bs, IRAs, all these qualified retirement plans. Are they good for your retirement planning? Or are they the worst account you could possibly own? This is a question. It's important you understand this. This is something I wrote an article in Kiplinger about recently. We are going to dive in to the topic of 401ks, 403bs, IRAs, great retirement account, or worst account you can own. Now, before I do that, I want to take a moment, like I do every week, and share with you why we do this show. You see, I believe your best is yet to come. I believe the second half of your life is going to be fantastic. That's the time in your life where you can pursue the activities that add meaning to your life, that are significant. But of course, if you're going to spend time chasing the activities that provide meaning and significance in your life, well, guess what? You got to make smart choices about your money. And the problem is the entire financial media seems to focus on topics like, how do you grow a portfolio? Which stock should you pick today? They never talk about which stock you should sell, just which one you should buy. But how do you grow a portfolio? Well, guess what? The decisions you make to grow a portfolio, they're not the same decisions that you want to make once you've hit the point of financial independence. When you've hit the point of financial independence, you want to protect what you've built. You want to have consistency with returns. You want to know, how do you take income? These are all different conversations than what it took just to get you to where you are today. So that's what this show is about. What are the decisions you have to make? What are the conversations you need to have to help get you through retirement, through the second half of your life with, where you don't have to worry about money, right? That's what this show's about. All right, let's go ahead and talk about those 401ks, those 403bs, those IRAs, all those tax qualified plans that we are taught from an early age are the place to go when it comes to your retirement planning, right? This is where you put your money, hands down. Everybody knows it. Now, what we're going to do here is, the first thing I'm going to do is I'm going to share with you the general rules of these types of accounts. And then as we go through the show, the next segment, we're going to talk about the advantages, why these are good accounts. And then I don't want you going anywhere, because in the third segment, we are going to touch on maybe some areas where you don't think about the negatives that come along with these accounts. So 401ks, 403bs, IRAs, how do they work? What are the general rules? Well, the general rules are simply this. These are accounts where you are allowed to deposit money for your retirement. In essence, you're making a deal with the IRS, right? You're making a deal with these accounts. What you're basically doing is you're saying, all right, here's a deal I'll make. I'm going to deposit this money, and from your side of the deal is that you are willing to let that money ride. You're not going to touch that money until you're at least 59 and a half years old. So you're going to let that money go. You're not going to touch it. Then the other thing you agree to is that by the time you hit age 70 and a half, you're going to start taking some money out. So you're going to let it go till you're at least 59 and a half, and then by the time you're 70 and a half, you're going to start at least taking something every year. That's your side of the deal. The IRS's side of the deal, what do they have to come up with? Well, they're telling you, I'll tell you what, we'll let you deduct the amount of money you're putting into that account, and we'll let you not pay tax on that money each year as it's in that account. You only have to pay tax when it comes out at the end. That's the deal. You put the money in, it's a longer term investment. The IRS says, we'll give you some tax breaks both today and as the money is growing over time, kind of on their side of things. Now, your company may or may not provide some match, but that's how the process generally works. All right, now what we're going to do, now you know how it all works. After the break, we're going to talk about what are 3 good things about that. And then later on, what are 3 bad things? Don't go anywhere. All right, folks, I want you to pay attention to me right now. I have a very special offer. If you are one of the first 10 people to call, and our number right here, 512-265-5000. If you're one of the first 10 people to call and you've saved at least $250,000 for your retirement, we will provide for you at no charge, no obligation, your own personalized retirement roadmap. In this roadmap, we help you take a look at where you stand currently with the risks that you're taking with your portfolio, the fees. What are you paying your advisors, both the fees you see and the fees you don't see? What about a retirement income stress test? Will your money last? We also run a tax analysis, a Social Security analysis. This is something you absolutely want. It tells you exactly where you stand with your retirement planning. It's absolutely free, no obligation, but you must be one of the first 10 people to call at 512-265-5000. Call now.
Essential financial strategies for a comfortable retirement. Join the Centennial Wealth Advisory team for an informative and exciting presentation with complimentary gourmet dinner and learn how to protect your assets from market volatility, how to plan your retirement, the best ways to generate lifetime income, how to safeguard your assets from unnecessary taxation, the difference between retirement advisors and Wall Street advisors, why getting a second opinion may be your most important financial decision, and much more. Choose the date and location that works best for you. Wednesday, July 6th or Thursday, July 7th at Cafe Blue in the Hill Country Galleria, Tuesday, July 19th or Thursday, July 21st at Gumbo's North in Georgetown. Presentations start at 6:30 p.m. and are free to attend with a complimentary gourmet dinner to follow, but seating is limited and fills quickly. Call 512-265-5000 or visit send-wealth.com/events to reserve your seats today. There is no cost and no obligation. Don't miss this important presentation, Essential Financial Strategies for a Comfortable Retirement. Call 512-265-5000 today.
Welcome back. This week we are talking about 401ks, 403bs, 457s, IRAs, SEP IRAs, simple IRAs, profit sharing plans, all of these qualified retirement plans that are designed to help you save money for your retirement. And what we're going to do in this segment is I'm going to share with you three positive attributes that these plans have that make them fantastic for your retirement planning, right? 3 positive attributes. So here's number 1. Tax savings. Hey, we all love tax savings. I mean, in the case of 401ks and 403bs and all these types of plans, you get 2 levels of tax savings. I mean, how cool is this? When you put money in the account, you get to deduct that from your income. Let's say you're making $100,000 a year. You deposit $10,000 into these accounts. voila, now you're paying tax on $90,000 of income. So whatever you put into these accounts, you get a tax benefit right now, today. It's immediate. That's always a good thing. Well, maybe I shouldn't say always, but that's normally a good thing. How about that? But it doesn't end there. It keeps going. Every year as the money stays in that account, as it grows and grows and grows, you get to enjoy something called tax-deferred growth, meaning you pay no tax on the growth or anything until you take money out later on. Now, in the financial world, they like to call this triple compounding. That is, you get interest on your principal, interest on the interest that your principal's earning, and interest on the taxes you otherwise would have had to pay. So in the financial world, they love this concept, triple compounding. You're growing these huge pots of money. It's a more efficient way to grow your money, so saith those in the financial industry. But it is a benefit. Tax deferral, tax deductions up front, these certainly are nothing to sneeze at. These are good things. So that's number one. What's the second good thing about these accounts? Well, a lot of you where you're working, whether it's for the government or maybe for a company, you may get some kind of employer match. Maybe they're matching a certain percentage of your deposits. And folks, when your employer is matching your contribution, you know what they call that? That, my friends, is free money. Free money, I think we can all agree, that is indeed a good thing, right? We love free money. So an employer match certainly helps juice your returns. It adds more money to the account. This is a big positive when it comes to 401k plans. In fact, those of us who truly understand all the benefits and all the negatives, all the disadvantages of 401ks, we know both sides. We'll still tell you, if your employer is matching, even with all the disadvantages that we'll talk about in the next segment, you still should put enough money in that account to get that employer match. So 1, taxes, 2, employer match. What's number 3? Number 3, forced savings. Hey, I got to be honest here. How much money would you really be saving if you weren't participating in your 401k or your 403b? When you participate, you tell them, just take this percentage or take this amount out of my paycheck, every paycheck, and just take it out. So before you even see it, bang, it gets right put into that savings account. How much money would you really be saving if it wasn't forced on you? I mean, if you're really honest with yourself, most of us, we wouldn't be saving a lot. This forced savings concept is very powerful. It forces you to continually set aside a little money towards your future. So these are all good things. Taxes, employer match, forced savings. These are the benefits of 401ks and 403bs, etc. Now don't go anywhere. Coming up after the break, we're going to talk about some of the disadvantages that you absolutely need to know about. All right, folks, I want you to pay attention to me right now. I have a very special offer. If you're one of the first 10 people to call, and our number right here, 512-265-5000. If you're one of the first 10 people to call and you've saved at least $250,000 for your retirement, we will provide for you at no charge, no obligation, your own personalized retirement roadmap. In this roadmap, we help you take a look at where you stand currently with the risks that you're taking with your portfolio, the fees. What are you paying your advisors, both the fees you see and the fees you don't see? What about a retirement income stress test? Will your money last? We also run a tax analysis, a Social Security analysis. This is something you absolutely want. It tells you exactly where you stand with your retirement planning. It's absolutely free, no obligation, but but you must be one of the first 10 people to call at 512-265-5000. Call now.
Essential financial strategies for a comfortable retirement. Join the Centennial Wealth Advisory team for an informative and exciting presentation with complimentary gourmet dinner and learn how to protect your assets from market volatility, how to plan your retirement, the best ways to generate lifetime income, how to safeguard your assets from unnecessary taxation, the difference between retirement advisors and Wall Street advisors, why getting a second opinion may be your most important financial decision, and much more. Choose the date and location that works best for you. Wednesday, July 6th or Thursday, July 7th at Cafe Blue in the Hill Country Galleria, Tuesday, July 19th or Thursday, July 21st at Gumbo's North in Georgetown. Presentations start at 6:30 p.m. and are free to attend with a complimentary gourmet dinner to follow, but seating is limited and fills quickly. Call 512-265-5000 or visit send-wealth.com/events to reserve your seats today. There is no cost and no obligation. Don't miss this important presentation, Essential Financial Strategies for a Comfortable Retirement. Call 512-265-5000 today.
Welcome back. So this is an area that we're going to talk about right now, that this is a conversation you absolutely have to have. Because here's the deal. Remember, every show, what do I say? Why do we do this show? We do it because everybody's talking about growing your money. Everybody's talking about how to, get to the stage of financial independence. But nobody's talking to you about what do you do once you get there. Nobody's talking to you about how do you protect what you've worked so hard to build. How do you make it last throughout a lifetime that may be 20, 30, 40 years. This conversation right now is vital, because we're now going to talk about what nobody talks about, and that is the disadvantages of 401k plans. I would set forth the argument that the instant you retire, this 401k, the 403b, the plan that you think is the coolest thing since sliced bread, the instant you retire, it becomes the absolute worst asset you can hold. You couldn't pick a worse asset to hold in your retirement years. It's as bad as it gets. Now let's find out why. Number one, the first thing you need to recognize is you have a silent partner. Not all the money is yours. I mean, sometimes I like to have fun with people. The other day we had a guy come in the office. He had $500,000 in his IRA. And so we were asking him to list his assets. He said, yeah, I've got $500,000 in my IRA. I said, really? It's like, sure. It's right here on my statement. I said, no you don't. He said, what do you mean? It's right here. Look, Fidelity. Here's my name. Here's my balance, $500,000. I have $500,000 in my IRA. And again, I looked at him, I said, no you don't. Well, what was I referring to? What I was referring to was the fact that it's not all his money. His name is on there, but what he's failing to recognize, and what you probably fail to recognize, is that you could have $500,000 in your IRA, your 401 or your 403b, but it's not all your money. And I'll prove it to you. Let's say you want to cash it out and take it all out in cash. How much do you get? Do you get $500,000? Or does some of it go somewhere else? Yeah, some of it goes somewhere else, right? It's called the IRS, right? The IRS is your partner. That is not all your money. Part of it belongs to the IRS. And the bigger the account, the bigger the percentage that belongs to the IRS. Remember, you are now looking, whatever that account balance is, you are now looking, in this particular gentleman's case, $500,000. For him, that is a $500,000 income, taxable income tax liability. He's looking at $500,000. He's going to pay tax on $500,000 at some point in his lifetime. And the longer he holds it, the bigger it gets, the more tax he's going to pay. You have a silent partner, you need to be aware of that. Number two, double taxation. Here's one of the dirty little secrets of IRAs and 401ks. When you pull that money out in your retirement years, that money counts against you when it comes time to figure out how much of your Social Security is taxable. There are millions of Americans who are paying taxes on their Social Security income only because they're taking money out of their retirement plans, their IRAs and 401ks. So when you pull money out of that 401k, not only do you pay tax on the money you pull out, it often makes your Social Security taxable as well. That's called double taxation. Pretty much only happens with 401ks and IRAs. And then number three. Without a doubt, there are no ifs, ands, or buts about this one. A 401k or an IRA, 403b, that type of account, it is the absolute worst asset to leave to a surviving spouse. I mean, think about it. You die, you leave your surviving spouse, that spouse is now a single taxpayer. Their tax rates just went up through the roof. When you leave them your 401k or IRA, what are you leaving them? A fully taxable asset. That's a great idea. Let's leave a fully taxable asset to someone whose tax rates just went through the roof. Good planning. So guess what? 3 reasons your 401k IRA is not the greatest retirement asset. I might argue it's the worst.
Essential financial strategies for a comfortable retirement. Join the Centennial Wealth Advisory team for an informative and exciting presentation with complimentary gourmet dinner and learn how to protect your assets from market volatility, how to plan your retirement, the best ways to generate lifetime income, how to safeguard your assets from unnecessary taxation, the difference between retirement advisors and Wall Street advisors, why getting a second opinion may be your most important financial decision, and much more. Choose the date and location that works best for you. Wednesday, July 6th or Thursday, July 7th at Cafe Blue in the Hill Country Galleria, Tuesday, July 19th or Thursday, July 21st at Gumbo's North in Georgetown. Presentations start at 6:30 p.m. and are free to attend with a complimentary gourmet dinner to follow, but seating is limited and fills quickly. Call 512-265-5000 or visit send-wealth.com/events to reserve your seats today.
This week, it's time to ask Banks some of your questions. And by the way, if you have a question that you would like to ask Banks, just go ahead and send her an email. Banks now has her own email address. It's banks@retiringwell.com. I know. What kind of world are we living in where a dog has her own email address? Well, my dog does. All right, this week we've gotten the question about Roth 401ks. So you may not know this, but a lot of companies with their 401k plans, they offer an option where you can put your money in the traditional approach, or your deposit into your 401k can go into what's called a Roth 401k approach. So I thought, what the heck, this is a great topic. Let's ask Banks what she thinks about Roth 401ks. Are they good, are they bad, or whatever? Well, so what did I do? I went and I asked her. We were out playing catch with the tennis ball. She's learning how to, I throw the tennis ball, she goes and grabs it. Not real good yet at bringing it back to me. Sometimes I got to chase her down, but she's working on it. But we're out playing with the tennis ball, playing catch, kind of. And I said, hey, Banks, by the way, what do you think about these Roth 401ks? What do we think about those? Oh my goodness, she started, jumping up and down and barking and even shook her head around and ran in her little circle a little bit. She said, Dad, these are awesome. Love the Roth 401ks, and here's why. With a Roth 401k, it works just like your normal 401k. It works just like it, but with one difference. with a normal 401k, when you put money in, you get a tax deduction for the money you put in, and then it grows tax deferred, but when you pull the money out at the end, you pay tax on it. Now, if you get a company match, that company match is added and all that good stuff. However, with a Roth, if there's a company match, you still get that. But with a Roth, when you put the money in, you don't get a deduction today, but it's tax-free forevermore. The gross tax-free comes out tax-free. And we all know tax-free retirement is a great thing. So according to banks, Puppy Bank says, whenever you have an opportunity at your office, wherever you work, if you have the opportunity to put money in a Roth 401k, if your 401k has that option, well then, by all means, you want to take advantage of it. So if you have a 401k option that is a Roth option, go ahead and use it. Now, again, if you have a question for banks, send her an email. Send it to banks@retiringwell.com. All right, before I let you go, I want to make sure, though, that we need to bring you up to date. A lot of you have been asking, how is Banks doing with her stock pick compared to Warren Buffett? You might recall at the tender age of 8 weeks old, Banks picked a stock for us. She recommended that you put all of your money in Nike. And the idea was, for her, she was going to eat Nike shoes as a puppy. So, we would have to replace them, thus increasing Nike sales and thus increasing Nike stock price. And we thought, okay, we'll compare how you do against good old Warren Buffett, the Oracle of Omaha, because you got to measure her against somebody, right? Well, anyway, if you've been watching the show, you know that poor Banks is a puppy. She was eating the wrong shoes. She's supposed to be eating Nike shoes. She's eating band shoes. The poor thing, she had it all messed up. Anyway, as I'm recording this towards the end of May. We're about, maybe coming up on 3 months in. Our guy, Warren Buffett, his Berkshire Hathaway, he's up about 6% over that time period. My poor puppy Banks, she's down about 8%. So she's behind by quite a bit. What's the moral of the story? The moral of the story is simply this. You probably shouldn't put a lot of stock in the stock selection, as it were, of an 8-week-old puppy, no matter how smart she is. Because, at the tender age of 8 weeks, come on, how much does she really know? But you never know. Maybe the rest of the year will prove her to be smart. We'll see. We'll continue to watch it. All right, folks, that's our show this week. Hope you have a terrific weekend. Take care.